Welcome to GATHER.nexus. In this video, we'll show you how to set up auto journal intercompany eliminations in GATHER.nexus, with the option to include Auto FX2 for handling currency differences. Auto journals automatically clear intercompany balances during consolidation. This keeps group reports clean, accurate, and ready for review without the need for manual re-entries. If your entities use different currencies, Auto FX2 can also be enabled to automatically handle translation differences caused by fluctuating exchange rates. Let's walk through the setup. From the dashboard, go to Group Financial Reporting, then select Auto Journals. Click Set Up New Auto Journal. First, fill in the basics. Add a short, clear narration, for example, IC Sales Elimination. Select the relevant group. Set the start period, and note the reference number, which is auto-generated but can be edited for tracking. Next, decide whether to keep the journal in draft or live mode. Draft means entries are created but excluded from reports, ideal for testing. Live means journals are active immediately. Now, set up the first company. Choose the company, select the intercompany account from its chart of accounts, and if applicable, select the counterparty, the customer or vendor linked to that transaction. Add a short description for clarity. Repeat this process for the second company, matching the correct intercompany account and counterparty if tagged. Make sure the descriptions are consistent to keep the link clear. Note that counterparty relationships should be reciprocal. If Company A lists Company B as a customer, then Company B should list Company A as a vendor. Where accounts aren't tagged, eliminations are set up directly using the intercompany accounts. Next, let's look at the optional Auto FX2 feesacture. Why is Auto FX2 needed? When transactions occur across entities with different base currencies, timing differences in exchange rates can leave imbalances. Each entity records transitions using the rate at the transaction date. But at consolidation, those same amounts are retranslated at the average or closing rate, creating mismatches in sales, costs, and profit after tax. Here's a quick example. The UK company invoices £1,000. The US company records it as $1,300, using a rate of 1.30. At consolidation, the average rate is 1.25. That means $1,300 converts to £1,040, leaving a £40 imbalance. Auto FX2 resolves this automatically. It moves the £40 out of profit after tax and into FX differences in the consolidated P&L. At the same time, it posts £40 into FX differences and reserves on the consolidated balance sheet. This keeps current year earnings aligned with the P&L, and your consolidation remains balanced. When you're ready, click Start Creating. Gather detects intercompany transactions, generates elimination entries, and applies FX2 adjustments if enabled. You can then review all journals under View Journals, where you'll see the narration, group, status, and eliminated amounts. Options include editing narration or amounts, reviewing history, or setting journals inactive without deleting them. All FX2 journals are fully visible in working papers for audit trail and review. And that's it. You've now seen how to set up auto journal intercompany eliminations with optional Auto FX2 in GATHER.nexus. For more help, click the chat icon at the bottom right of GATHER.nexus or email us at support@gather.nexus.